Welcome to the Insurance Dork channel powered by Customers First Insurance Group. Have you ever wondered why your rates went up, what that coverage actually means, or how to protect your stuff without overpaying? If this sounds like you, you're in the right place. Are you ready to dork out on some insurance? If you own rental properties, there's a very good chance you have coverage gaps you don't even realize. And I'm not talking about obscure, rare scenarios. I'm talking about common situations that happen every year. Tenants moving out, minor renovations, partial roof claims. Most landlords I work with have a regular day job. They own 1 to 5 rentals, self-manage, bundle their insurance. They're smart, they're practical, but let's be honest, they're stretched thin. Insurance on investment properties works very different than most people assume. The first question I ask any landlord, is the property currently occupied? Because most policies for investment properties are written as tenant occupied. If the tenant moves out, you typically have about 30 days before coverage starts changing. That means if you're cleaning it, repainting it, doing light repairs, waiting to release, after about a month, certain coverage is null and void, unless the policy is rewritten as vacant. The big ones, vandalism and water damage. And those are two of the most common claims on rental properties. Vacant homes are riskier than those that are occupied. Frozen pipes, unnoticed leaks, break-ins, so the policy adjusts for that increased exposure. The key isn't fair, the key is awareness. When you switch to a vacant dwelling policy, coverage often changes. Some carriers exclude vandalism completely, limit water damage, restrict liability coverage. Some allow endorsements to add coverage back in, usually at a higher premium. This is why your agent should be asking, how long will it be vacant? Are utilities on? Is someone checking the property weekly? Are renovations happening? If those questions aren't being asked, assumptions are being made. And assumptions in insurance are risky and expensive. Now let's talk about valuation. This is where investors get surprised. Many rental properties are insured on an actual cash value basis instead of replacement cost. And I get why. If you bought a property for $120,000 and put $30,000 into it, you might think, if I get my $150,000 back in a total loss, I'm fine. That logic makes sense for a total loss. But the valuation doesn't just apply to total losses. Without the right endorsement, you might get burned on partial losses. Example, let's say you have a replacement cost of a home at $300,000. But you insure it for just $150,000 actual cash value. You're effectively insured at 50%. Now, you have a $40,000 roof claim. The carrier may pay 50% for that loss before deductible. That's $20,000 less your deductible payment on a $40,000 repair. That's not a trick. That's coinsurance math. But if no one explains it up front, it sure feels like one. A lot of landlords bundle their rental with their home and auto. Bundling is convenient, but rental property policies use different forms, endorsements, vacancy triggers, and valuation rules than homeowners insurance does. So just because someone is excellent at personal home and auto doesn't automatically mean they specialize in landlord exposure. That doesn't make bundling bad. It just means rental property insurance should be treated as its own category. If you own rental properties, here's what I'd recommend reviewing. Vacancy limitations, actual cash value versus replacement cost, coinsurance percentages, water damage exclusions, vandalism exclusions, and available endorsements. You don't need the most expensive policy. You just need to understand what you actually bought. Most claim problems don't happen because landlords were careless. They happen because something wasn't explained clearly. If you found this helpful, do me a favor. Hit that like button. Subscribe to the channel. Turn on the bell so you don't miss the next episode. Got questions? Drop them in the comments. I'd love to hear from you. My name's Mike Varicki with Customers First Insurance Group, aka the Insurance Dork. Thanks for watching Insurance Dork, where we make sense of insurance without putting you to sleep.